Aloha, my name is Sean Satterfield, Alice Insurance Business Development Director, and welcome to Risky Business. We're excited to be here with Maile Fuchshuber.
Hi, everyone.
Hi, Shane Choi. Hello again. Account executive with Atlas Insurance.
Maile, tell us a little bit about yourself and where you work.
Okay, my name is Maile Fuchshuber, and I work at First Insurance Company of Hawaii in the firms department, and I am a senior flood underwriter.
Maile, can you tell us a little bit about how you got into insurance?
Okay, well, that is a very good question, Shane. It's a very interesting story. It happened 24 years ago in 2001 when I was selling cars. And I had to call on an insurance agency to provide the first insurance auto policy, actually. And they would show up and deliver the first insurance cars, and that allowed my clients to drive their brand new cars off the lot. And about 6 months in, they needed an agent. I didn't know what that was about, and I wanted to give it a go. So I took the job, and it took me a month to pass with my producer license. There were a lot of tears shed that month. And I have been in insurance ever since. I enjoy it, haven't left. Yeah.
Everybody has their own story.
Yes.
Awesome. Well, today we're going to talk about flood insurance.
Okay.
Yeah. And I think we should first start off by telling the audience, what is flood insurance and why do we need it?
That is a very lengthy answer for
Loaded
that.
question.
But yes, it is. It is. Flood insurance is actually a very important flood policy to have, especially here in Hawaii. Mm-hmm. We have a lot of coastal flooding and inland flooding, a lot of inland pooling, and we see many types of storms throughout the year. So we not only have hurricanes, but we also have tropical storms, heavy rains. We have oceans that surround us. So we have a lot of king tide situations. And so a flood is definitely should be considered in everybody's insurance portfolio. I'm sorry, what was your other question, Sean?
No, it's just why people need it and what, so people can understand a little bit about what is flood, because as an example, maybe you can give the example of a milkshake versus a chocolate cake.
Okay, yes. So flood coverage specifically will only cover the flow of a flood, of mud waters, but not the actual land movement. So when you say chocolate shake or chocolate cake, we'll cover the chocolate shake, which is the moving mud flow, but we will not insure the chocolate cake, which would be like lumps of earth that fall off into the floodwaters. And that can get kind of sketchy sometimes because people imagine that the rain, it was heavy rain or it was storm, and the flooding from the mountains above caused a lot of the flooding below. And that's why the land mass moved and caused further damage. But that would be more of a land movement coverage, which would probably fall under a different type of policy altogether.
Possibly earthquake.
Yeah, earth movement. And we have quite a bit of that as well. So I'm sure there are policies out there that would cover that, but we will cover the mud flow.
Mud flow.
Yes.
Very good.
So flood has a very technical definition, right?
It does.
As defined by the National Flood Insurance Program through FEMA, right?
Yes.
I know you probably have it written down somewhere here, but
I do.
I'm sure you can recite it off of the top of your head too, somewhat.
I opt not to because it is actually a very detailed definition, and it really depends on if you have a general a situation of general flooding occurring, but there are a lot of caveats to that type of flood that will determine whether or not you have flood coverage. So for us, just to plainly explain it, a flood is going to be an event that is out of the norm. The land is typically dry. It's not usually inundated with water or even temporarily flooding with water occasionally. It's generally a dry area that is unaffected by any type of flooding. And then when the flood occurs, you have to have either 2 acres of land be affected or 2 properties. And one of those properties needs to be the insured that's filing the claim.
Right.
Yeah. And then there are a lot of other items underneath the technical definition provided by FEMA. But that's the gist of it.
Okay.
Yeah.
2 acres or 2 more properties, you
Yes.
said, right? When we're talking about properties,
or at least 2 properties.
right?
Yeah.
So when we're talking about properties, what are we talking about? There's different types of properties, right? And different types of policy forms, I should say.
Yes. Yes. So the definition applies to all properties. Properties meaning residential, so dwellings, residential dwellings, single family homes. Commercial policies we also offer for commercial buildings. It could be shopping centers, restaurants. Oh gosh, there's any commercial really is we have the ability to write that under flood. And then we also have condominiums, whether they are skyscrapers, so that's the RCBAP policy. We also have 2-story walk-ups, 3-story walk-ups for just regular apartment buildings, hotels. So we write virtually any type of property that's out there, as long as the property has a structure on it with 2 walls and a roof.
Oh, that's a good.
Very important.
That's very important. Right.
Yes, we don't write vacant land.
Yeah.
Yes, and we don't write things like pavilions. We've had people come into, ask for insurance for pavilions, but pavilions only have a roof and like an outer structure. They don't have 2 supporting walls. So, but interestingly enough, let me just throw this in there too. We do write COCs.
Okay.
Course of construction.
Course of construction. Yes.
Okay.
Yes, that's the only thing we will write that does not have the existing walls.
So you said about condos, for example.
Yes.
Yeah. Let's get into condos and what is an RCBAP? Because that's something that
It's a mouthful.
yeah, it's a mouthful. What does it stand for? And what does it do?
RCBAP stands for Residential Condominium Building Association Policy. I know it, I promise, yes. But typically refers to a condominium ownership under an AOAO specifically. So that's not going to be for like a hotel.
Right.
Yeah.
Right. And typically how does somebody get an RCBAP policy then?
Through a lovely agent. That's the start. Property managers can help them out as well, but it would typically be to find a carrier, also known as a Write Your Own or WYO, who participates in the National Flood Insurance Program, like First Insurance.
Yeah.
And we will assess the building, the amount of units that are in it, the amount of floors, what is the composition of the foundation, like how is it built? Is there an elevator above the ground, below the ground? There are a lot of details that go into assessing an RCBAP and then writing one. So, yeah.
Perfect. Thank you.
So you work a lot with insurance agents, right?
I do.
But I think what helps is for the policyholder or the client to get involved in that as well, provide some information. Is there any information in order to get a quote? What are the primary things that policyholders can provide? What's the kind of information that is usually looked for whenever you're providing a quote that you see commonly?
Okay, so commonly we do have a quote template for us personally that we like to use. It includes the named insured, their phone number, their email address. Email address is really important these days. It's a huge way to communicate, and so we do really push to have the email address. Actually,
But you guys don't do fax anymore?
There are people who like to email faxes.
Yeah.
Which is very
E-fax,
interesting. Yes. Or scanned copies of faxes, so that's fun. But, so sorry, getting back to it, named insured, phone number, email, of course, the property address. If there's a differentiation for the mailing address, then we would like that as well. And then importantly, we need the building details. So the year built, the square footage, how many floors are in this building? Is it elevated with enclosures beneath it, or is it elevated without enclosures? Does it sit on the land? Is it a slab on grade type of foundation? And then of course the coverages. We'd like to know what coverage limits you folks need, and then they're different across each policy form. So RCBAP has its own math to how the coverages are afforded, and the same goes for commercial and residential policies.
We can get into a little bit about that in just a bit, but
Okay.
what makes the difference between an RCBAP and I understand that there's another policy out there called a general property form?
Yes.
What's the difference between the two as far as how eligibility or qualification, and then of course I'm sure there's a big difference in coverage as well.
Yes. So the RCBAP is exclusive to associations in condominium buildings. The commercial form is for businesses, anything that would fall under a business. Again, shopping malls, stores, groceries. And then also hotels fall under that form. They do not qualify for the association unless they have an association. That we do have a couple of insureds out there where the ownership is not so clear sometimes. And then some apartment buildings, I'm trying to think, like probably most of the apartment buildings that I'm thinking about are 2 and 3 story buildings. They're low rise. If they are not an AOAO, then they could be put under a commercial form for units above 5. And then anything outside of those 2 areas would typically be under a dwelling form. Okay, so the dwelling form also, there is a way to ensure the detached garage. Let's say the detached garage is, the RCV is very high on that. And there's no one living in there. And the insured wants additional coverage on that garage. That garage would also go under the general property form. Yes. So while there's 10% of the dwelling that's afforded for that, provided no one's living in there, there is an availability for a commercial policy for a residential garage.
Okay.
Yeah. So we get to be creative sometimes. Yeah.
Definitely. I know you are creative, definitely. What about the percentage occupancy for RCBAP versus not RCBAP? Is there a percentage that has to be like residential in order to qualify for an RCBAP? I think it was something like
Yes, 75%.
75%. Right?
Yeah, 75% residential and then 25% commercial.
Okay. And then if it's any less than 75%, then they wouldn't qualify for the RCBAP.
Correct.
Right. And then I know I personally don't like math, but there's a formula, right? Formula for calculating the coverage on an RCBAP.
Yes.
Understand? What is that formula? Or just briefly, I know arithmetic, whatever it is, but
The least complicated way to come up with the coverage for an RCBAP is max $250,000 times or multiplied by the amount of units in the building. There is also a caveat to that. If the replacement cost value is a specific amount that does not afford for $250,000 per unit, then that's the max coverage we're going to hold. Yeah.
So I think it's, as you said, 250,000 times the number of units versus the RCV, whichever one is lower. Is that right?
Yes.
Is the maximum coverage
Right.
that's afforded. Okay. And I know that kind of comes into to be important with lending.
Yes,
with
it does.
Federal loans.
Yes.
Can you specify just a little bit about that as far as like what's required, or that you know that's required for coverage year to year?
With regarding federal loans specifically?
Right. I think usually they require the maximum coverage in most cases for Fannie Mae and Freddie Mac loans.
Yes, which will typically be the 250 times the amount of units. And that's provided that the building is in a flood zone that is being required to be covered by the banks. So we do have instances where the RCV is low enough to where the units are not being insured at 250,000. And when we have those types of situations, the insureds can have a private policy sometimes to fill the gap. And then oftentimes the banks will honor the fact that the RCV is not completely to the 250 times the unit amounts and higher. But usually we find that they are at 250 typically.
That's typically conventional loans we're talking about.
Yeah.
Fannie Mae, Freddie Mac side.
Yeah.
You brought up private insurance. Tell us the difference between NFIP versus private.
Okay. I can speak specifically to First Insurance.
That's fine.
Okay.
Yeah.
So our private markets have mirrored our NFIP policies.
Okay.
And in general, one of the only differences is that our private markets will do an RCV versus an ACV on the buildings.
Can you explain a little bit about what is an RCV versus ACV? Just for our audience.
Okay. So RCV is replacement cost value,
Mhm.
and ACV is actual cash value. So if we're talking about NFIP, replacement cost value is possible on the RC BAP, provided that they've covered the 80% coinsurance clause.
Right.
In dwelling fire, there is no RCV, and on the commercial form also there's no RCV or replacement cost value. It's going to be actual cash value. So those are the differences within the NFIP. Now, if we cut over to our private side and we write a dwelling or a commercial, they'll have the replacement cost value on the building. So that's the difference between the two. And that's just because that is the type of coverage that was elevated on the ENS side, even though they're mirroring the coverage forms from the NFIP.
Very good.
And going back to the coverages,
Mhm.
so I believe there's two different types of coverages on the general flood insurance policy, right? Building and
Okay.
contents.
Yep.
Is that right?
Mhm.
And deductibles that apply to that.
Yes.
So what's considered under the building?
I'm sorry?
What's considered under, let's say we have a commercial building. What's
Mhm.
considered for coverage under a building?
So max
would be
coverage?
covered?
Okay. Max coverage for a commercial building is going to be 500,000.
Mhm.
And contents is also 500,000.
Mhm.
For a dwelling fire, the max is 250,000 on the building and contents is 100,000. When you go to RC BAP, it's going to be, again, the 250 times the amount of units typically. But the contents is also just 100,000.
Gotcha.
Yeah.
And let me specify what's covered under the policy. So when we're talking about building, what's a building on policy? Let's say an RC BAP. So we're talking about the condominium building. Is there anything else in addition to the building that's kind of considered maybe below the building?
The foundation?
Foundation.
Yes. We
Yeah.
do include the foundation in our cost estimators.
Mhm.
Yes, at 10%. So
Okay.
as long as we have that fit in there, the foundation is actually one of the most important things about a building in general, but especially for flood, because that's going to affect the way the policy works for you, depending on how strong your foundation is. So yes, the foundation is definitely covered. Also what's covered are, for the building specifically, the easiest way to, again, put that is if you have a unit or a building and you flip it upside down, everything that falls is under contents usually, and everything that sticks is going to fall under the building coverage. So
You guys are on the same wavelength. You guys have the same illustration.
Yeah, that's right.
Oh, do we?
We made that
Water,
illustration
the
prior.
cup of water and the contents just pour it out.
Yep.
the same
oh
thing.
yeah.
That's my analogy.
Oh yep.
Yeah,
It makes it easier.
Definitely.
So Maile, let's get into some fun scenarios and break some myths
I loosen
or
my shoulders here.
or understanding about flood. So, we're in hurricane season right now,
Yes, we are.
and hopefully, knock on wood, nothing happens.
Yes.
But let's just say we do have a hurricane
Mhm.
and there's a storm surge.
Yes.
Sometimes there's a misconception of what policy that falls under. Let's just say you had a storm surge, water comes from the ocean, and because of the hurricane, it's like a 10-foot wave, it damages a property.
Okay.
What policy would that fall under?
Okay. That's a good question. And it depends on the type of loss. So a lot of
It
time depends.
That's a great
Always
answer.
depends,
It
you know?
depends.
You gotta ask the adjusters. I'm in right now. So waves during a hurricane are typically wind driven.
Mm-hmm.
So the waves themselves would not be something that we would look for as much as we would look for what type of damage happened to the building. So
Mm-hmm.
for flood, we don't insure groundskeeping, the trees and things that might get washed away during the storm.
Right.
Landscaping, it's going to be the building itself.
Right.
So if flood and hurricane are involved, an adjuster is going to usually look at the property after the loss,
Mhm.
and there's usually a line of water, of demarcation where flood waters rose, whether that be inland water from rain during the hurricane or coastal waters that washed in. A line of demarcation will form. And so usually the flood policy will cover everything below that line,
Mhm.
and the hurricane policy will cover everything above that line.
That's perfect.
Good.
That's great.
Can I just add
Yes, please.
another thing about coastal waters? So The flood policy does cover tsunamis. We get that question. That's probably the biggest question we get asked. Right. Yes.
And it's
as it should be, right? We just,
right?
yes.
That's right. You may have insurance, but are you covered?
Right. And we just had a tsunami, like, what was it, a couple months ago?
Mm-hmm.
So it was a squishy one, but still it freaks people out. And, so we do cover the tsunamis. We also cover king tides and large storm surges that come in from, just tropical storms that pass by Hawaii. So we do cover for those things. What we don't cover for it, though, is erosion of coastline, which is not talked about enough. I don't think there's enough people who know that. We have coastal lines that are being affected, for instance, on Oahu on the North Shore, or Laie specifically. And it's been maybe a few years where some of those houses, and I think they still currently are, kind of being lost to the erosion.
On the edge.
Right. Yeah. And the flood policy does not cover that because that is not a sudden flooding of a dry area. Yeah. Yes. And it's more of a constant. It's just the nature of what's happening there daily.
Right.
So that would not be something that's covered under a flood. So if you do have a client who has erosion occurring at an oceanfront property, do not place them under a flood policy for those specific reasons. Right. The loss will likely not be covered.
Okay.
Yeah.
I do have a question, something that unit owners actually ask a lot. Mm-hmm. For condominium building, a high rise, so you have multiple floors, why is it that the association needs a policy, even though maybe someone's on the 5th floor or above? Why do they need a policy that covers the whole building? And why is it? And I kind of alluded to it before, as far as like what it covers. Is there like a specific item on the policy that kind of comes into play?
Well, the entirety of the building is used to establish the amount of coverage under the policy. Yep. And unless there's going to be one of those movie grade tsunamis,
okay,
right?
Bigger than the building.
Yes. Then probably 3 of the floors realistically could be affected. And so the insurance that's available on the policy will be shared amongst the repairs of the 3 floors. And however, the adjuster decides to divvy it up depending on the claim. Again, a lot of this is we're envisioning what would happen. And luckily we haven't seen this happen to have like a very precise answer. But yeah, so to your question, all of the other floors above are being used to come up with what the coverage actually is.
Right, the estimate, yeah. Because
it
would affect elevators, for example, or equipment.
And foundations.
Yeah, and foundations, or things that in that area.
Correct.
Lobbies, etc.
Yeah.
You think if there's a storm surge and it affects the foundation, is that going to be like a huge loss or a huge claim?
It could be. Yeah, it definitely could be, especially if the foundation has been impacted in a way that it can't support the rest of the building or even parts of the building. So yeah, that is a very
intriguing question.
It is, and it's kind of scary to imagine, because we do have we have buildings here that are insured, and they were built in the 60s and 70s. Right. And while the upgrades are occurring, every so many years on the building itself, there's not really a whole lot done to update the foundations. So yeah, that is definitely a concern, and is definitely a reason why you should have flood insurance.
Right.
Compromise to the structure, right? I think that might be
the integrity for sure. Yeah. Yeah. There was something I wanted to add to that. We get asked this question about the floors above, say floor 3. Why do we need insurance for those if it's very unlikely that we're going to get any type of flood damage, especially people, 10 floors and above? And with the insurance program that we had prior to risk rating 2.0, which is what we have now, everyone paid the same rate no matter what floor they were on. And that made it difficult because people want to buy homes and they want to be able to afford their mortgages, but it makes it very difficult when they almost can't afford the insurance that's required in order to have that mortgage.
Right.
And so people prior to risk rating 2.0 on the higher floors were being affected by that, with also knowing that they're probably not going to have a loss. And this is for if they're carrying their own policies. In risk rating 2.0, there is a rate change. The higher you go up in the building. So while you still will be required to have a policy, let's say it's a condo in a VE zone and there's some kind of bank request to have an additional coverage of some sort, whatever, then they do get a break in their rating because they are on higher floors.
That's a great point on the break in the ratings. There's something that we had discussed earlier about being in NFIP insurance and staying in NFIP insurance. Can you explain the grandfathering rules of NFIP, if that's the right term that I'm using?
Yeah. And as you can tell, like, this is my favorite subject in Flood, nerd alert. And it's because I do see so many people negatively affected by the lack of a cap discount or the loss of a cap discount that it's really important for people in the insurance industry.
Explain what a cap discount is.
I will.
Okay.
It's CAP, yes. And so a cap discount, easily explained, is it's a cushion of credit, if you will, that prevents an insured from having to pay the full risk premium upfront on a flood policy. So let me back up a little bit. Flood policies under the NFIP do not currently have a payment structure to, like a monthly payment. Right. So you have to pay at the renewal, you have to pay in full every year. So when we were prior in that 30-year program, before we moved over to risk rating 2.0, the rates were really different, and they were not based on a ton of variables like they are now under risk rating 2.0. So when we moved all of those policies, rolled them all over into risk rating 2.0, the premiums drastically increased. Yes. And so to protect the insureds from paying those high prices, FEMA inserted what's called the cap discount, and that serves as a cushion. So each year that you have a renewal, and if you have that cap discount, they do a rate increase, and a slight bit of that discount comes off and you pay for it in the premium. And that just happens until eventually the cap discount is at zero. And maybe that's 10 years from now. So maybe 10 years from now, you're paying the full risk premium. But today you have this lovely cushion called the cap discount. Now there's a catch to this cap discount if you are remarketing business. And for insureds, remarketing business means that maybe you're not pleased with your premiums, and so you're going to go look for cheaper insurance. Right. In the NFIP, if you have a cap discount and you leave the NFIP because maybe private flood is cheaper, and then let's say you move to that private flood company, and on the renewal, they increase your renewal because now they've already got you. And your premiums are now 200 or 300% higher than they were when you left the NFIP. And now you want to go back to the NFIP. The problem becomes that they have, and as an insured, has lost their cap discount. So now right off the bat, they're trying to leave this high amount of rate in the private flood sector to come in back into the NFIP. They don't have a cap discount, and now they are paying also that full risk premium upfront, which is comparable now to private flood and can be quite high. So my advice to anybody about the cap discount is, if you're thinking of remarketing, is to and you're in the NFIP, is to look at your declaration page, specifically the rate area, and see if you have a cap discount. Yeah. And if that is a large cap discount, some of those are upward of $10,000, $15,000. In the associations, they're upward of $40,000 and $50,000. If you have large cap discounts, it's worth it to just stay there. If you have a cap discount that's like $112, but you're going to save $2,000 moving to another insurance company, then sure, fair. But check the cap.
Do the math. Do the math.
Do the math. Yeah. Yes.
Right. Well, speaking of math, isn't there a percentage maximum that the NFIP can increase certain policies? I want to say 18% was for general property form, and then commercial, and then 26%
25%.
for 25. You got it.
Yep.
You got this memorized like the back.
I try, not always. I try. A lot of times I have my, my tools at my desk. So, but yes, 25% is the max.
Yeah, a lot of good insight for sure.
Yes,
Yeah.
and also they do increase. We did notice in this year that they are back to increasing rates in April and or October
Okay.
of each year, which means there could be 1 or 2 rate increases in a year. So the months are April and or October.
Yeah. I have one more question about flood and basically flood zones. And a lot of people are thinking
Another
like,
fun one.
well, if I'm in a flood zone, do I need flood insurance? And if I'm not in a flood zone, why should I get it?
Right. Okay, so you're always in a flood zone.
Yeah.
You're always in a flood zone. There's no such thing as not being in a flood zone.
Right.
Everyone's in a flood zone, but you might be in a higher risk flood zone or in a lower risk flood zone. So typically, lower risk flood zone is going to be an X zone,
Mhm.
typically.
Or D.
And D is actually, it's undetermined. So we don't know, it's going to be a surprise. And so sometimes the rates can be a little bit higher on the D side, actually. This is going to be like a multi-answer question.
Fun stuff.
So yeah, because risk rating 2.0, we have to consider risk rating 2.0 now. So everyone's in a flood zone. X is a lower risk. A and V zones. V zones are coastal. A is can be coastal also, but is oftentimes inland water flooding or water pooling. So the V's and A zones, if you have a lender, is going to require you to have coverage for those zones.
Yeah.
If you have an X zone, it's optional for you. But we do have many X zones that are right next to V zones.
Okay.
And a lender may sometimes require that you carry it because we can see the line of demarcation on the map where our studies say, okay, this is probably where the water is going to come, like right about here, but maybe not. But the storm never goes, oh, there's our map line. Let's not cross over into X. So X zones that are up against VEs will oftentimes see premiums that are more seen in a VE flood zone.
Mm-hmm.
But it's interesting. It's not actually because it's VE. It's because of the distance to water. So if I take us back again to the old program, all of the flood zones, X, A's, D's, V's, they had their own rating. And if you were an X here versus an X here, and this is your VE, you're still going to pay the same rate, even though you're farther away from the V than this guy. But now that we have FEMA has put in a topography system into their algorithm, and it's all measured distance to water. And that's any water. It's not just the ocean. So it's also going to be levees. Even FEMA approved levees will still have a high rate. It doesn't lend a discount because it was approved by FEMA. So it could be inland streams, rivers. Hanapepe River is a big one for us. The prices are quite extensive there because of the type of flooding that does occur there in Hanapepe. Same for Hanalei. These are both on Kauai, by the way. And so where the previous program really based premiums off of the flood zone designation, risk rating 2.0 does not look at that anymore and really just keeps that as a statistic. And now everything is based off of the distance to any water source and how the building is made. Yeah.
Let's dig into that a little bit more. So when we're talking, and we've talked about this, we went back and forth on multiple things. High-rise building.
Yes.
What's the certain features that affect the premium? Not the most, but basically affect the premium somewhat.
High impact, you mean? Like high premium versus low premium?
Yeah.
Okay. So a higher premium is going to exist where you have a basement as a foundation. You might have basement parking. And those are going to look like, we have several of them in Waikiki, where you can walk past the building and you can look down into the parking structure because the walls are open. And you can see the pillars that support the building above the parking structure. But because it has a basement, or if they have additional walls that does not specifically describe elevated with or without enclosure, that could be a reason for a higher premium, especially if it's categorized as a basement. A elevated building with enclosure, which kind of looks slab on grade. We have to look at all of the photos to determine what that is. Could also see a higher premium because the water theoretically would affect the enclosed area of the elevated building. And then slab on grade is relatively high because the ground is, or the building is sitting on the ground and the floodwaters can access which is usually like a common area or a lobby, something like that, of the building. So you're going to see higher premiums for slab on grade. The best one is probably elevated without enclosure.
Okay.
Or elevated with enclosure, but the only reason for the enclosure, it could be basement too. The only reason for that enclosure or basement is that there's an elevator shaft below the building.
I see.
And so, we will honor the fact that it's just this little space for the elevator and you will not be charged for that. And so the building will, when we calculate an elevation certificate, will show that the building is above the ground. Yes.
It's like you're reading my mind. Elevation certificate.
Yes.
Those are important.
Sahelu.
What the heck is that?
Yeah. So an elevation certificate is a very scary document. And I happen to translate those. It's basically a document that is provided by a building engineer or a land surveyor that compares the base flood elevation of the land. So it'll take a flood map and say, okay, this is the base elevation of where this building is sitting. And this is how high this building is sitting above the base flood elevation or below the base flood elevation. And then NFIP has their own calculations in the system and we punch in all of the numbers and make sure that we categorize everything correctly and we press go and it comes back and tells us how high or how low above the BFE we are. And then that will determine the rate that we are charging for that building.
Specific training on that, right?
Yeah.
Yes.
On elevation certificates.
When I was first getting trained on those, it really is another language. And my boss at the time had said, don't worry, you're going to get it. There's going to be a day where I tell you slab on grade, attached garage, and tell you all these things, and you're gonna see the image of the house in your mind or see the image of the building in your mind. I'm like, there is no way that I am ever going to imagine what this building looks like because I'm looking at the pictures and trying to figure out the calculations. And he was 100% right because someone can just tell me what's on the elevation and I see the building like manifest in my mind. I'm like, wow, that's pretty cool. So
well, it's even more than the elevation certificate because I think we've had a situation where the elevation certificate, it was a little different compared to another elevation certificate that we saw for another building. But I think we got some details from the client and that helped to bring the premium a little bit down, elevation details, right? So
yes,
like comparing, I guess, this versus this. And I don't know the actual terms, but I know that
I get what you're throwing down.
You asked all the questions.
Yes. So sometimes we'll get elevation certificates that are missing information that helps us to make our judgment on how we're going to rate this building. And if we know that the information is not present, then that allows us to ask for that. It allows us to investigate the elevation certificate more so that we can either get the information from the engineer and put it on the EC, or we can get the information from the insured so that we can put our narration together and share it with the flood center, with the FEMA flood center. And that's really important. It could be like $50,000 important, right, Shane? Yeah.
Yes.
Yeah.
Save some money there.
Yes.
Thank you.
This has been great. Is there anything that you feel that you want to ask us before we end our podcast?
I actually did have a couple more questions. So
okay. No. Sorry.
I don't mean to catch up. There's actually two kind of glaring things that we're dealing with right now. One would be the government shutdown.
The shutdown, yes.
Well, at least at the time that this is being filmed.
Yes.
Yeah.
Tell us
Yes.
about how that's affecting your job, your day.
Today's October 30th, 2025.
Okay.
Yes. And we are currently in a government shutdown.
Mhm.
And the NFIP is a government program. So currently the flood program is shut down and we are not writing any new business. We are, however, accepting renewals for policies that the invoices were released before October 1st, which is when the shutdown began.
Okay.
And that's going to take us out to policies effective, I think when I last checked, it's December 29th, I think. So all of the policies up until December 29th, they can send in their payments and we will renew the policies. Anything outside of that is in a holding pattern.
Okay.
We can issue quotes so that you can prepare your insureds in advance, but they cannot bind until the government shutdown is over. We can also make non-monetary endorsements to policies. So name changes, address changes, anything we could add or remove mortgagees, anything that does not cause a monetary increase in premium or decrease, we can make those changes now. And anything that causes some sort of money charge, we'll have to wait until the shutdown is over.
So no new policies.
So, no new policies. No new policies with NFIP.
Yeah.
But we do have private market.
Yes. Okay.
Now, we're happy that we have private market, but private market is also pretty strict on what we can write.
Yeah.
So, but we are always happy to try, and we use both of them as tools to try to get the best coverages for our agents and their insured. So,
Okay.
yeah.
Great.
There's a unique thing about flood insurance specifically. You can't just get a policy in place immediately, right? So what's the parameters around the logistics basically of getting a policy in place? How does that work?
Okay. The only way you can get a policy right away with a current effective date is if it's a requirement for a new loan closing. So you have a brand new loan that's going to close. It's not closed yet. One of the requirements is that you need to have flood insurance. We get the closing date, and that's the date that we can use. Now, once you have that date solidified in your quote, you have 7 days to make that payment before that date starts to change. So anytime we receive a payment after those 7 days, that effective date is going to move out however many days it took to apply payment.
Okay. Makes sense.
Other than that, we have a standard 30-day wait. So you quote a policy today, insured pays for it. It goes into effect 30 days from now.
And they have
That's usual.
You guys have to receive payment before that.
We do, yes. So kind of similar to the loan closing, the longer you wait to make your payment, the longer that 30 days is going to stretch out.
Okay.
Yeah.
How does that work for renewals?
That's a good question. That's a really good question. So
Yeah.
for renewals, you have grace period of 29 days after the effective date.
Okay.
So your effective date of your policy is October 1st. You have 29 days after October 1st, which is October 30th, right? To make payment. If you
Excel
don't,
sheet, put your date in plus 29. That's the date, right?
is that how you do it?
Yeah.
I Google. I just go to Google and I'm like, what is 29 days after 10/1/2025? And people be like, the math is so easy. But I'm paranoid that I'm going to like miss a day
Well, sometimes
somewhere.
there's going to be 31 days and
Right.
maybe it's the 20th. Yeah.
Yeah, so I just do that.
I'm a purveyor of Excel. I love Excel.
You know what? That is a really excellent hiring quality to have.
Oh, thank you.
It is. Excel scares people, much like flood coverage.
Yeah.
So,
Well,
yeah.
tell you have so much experience.
I enjoy it. I've been in insurance for 24 years. I've been an agent. I've handled claims reporting. I've been a CSR. I've been a personal lines CSR. I worked in HR and insurance, in corporate underwriting, doing filings, and I landed in the flood department, and it's a solid focus, and it's a very dynamic line of business, and it's always changing and keeping me on my toes so I don't get bored. And there's so many caveats to it that I thoroughly enjoy writing flood.
Yeah.
Yeah.
I can tell you read your flood manual. I've seen.
I
specific-
try.
Yeah.
I try. There are questions that do get me where I'm just kind of questioning myself and wondering, oh, should I be doing this? How come I don't know this?
Yeah.
And I do, there are moments when I do have to rely on my coverage forms and my manuals because there's a lot of stuff in there that never actually occurs or hasn't occurred often, or there's a slight twist to the question or the
Some
concern.
nuances, right?
Yes. Or the loss is something we've not seen, but you can bet your bottom dollar it's more than likely in that flood manual or it's in our third-party claims handler. And we always go to them when there's something we really just don't have an answer for. And we get the answer from them directly because they're the ones who are going to adjust it. So yeah.
That's great, Maile.
I'm sorry I cut you off.
No, it's okay. It's okay. We're on a roll right now.
It's like an extra 15 minutes or something.
Uh-oh.
Yeah.
Uh-oh.
Well, it is a pleasure for you to be here. Thank you so much, Maile. This is awesome.
Thank you.
Yeah.
It's not ended there. Let's just ask us some questions and, let's do something fun too.
Okay. Oh gosh. Okay. So let me think. I have a question for you folks. Let's see. When an insured comes to you for flood insurance, what is the most concerning question they have for you in terms of coverage?
Coverage. I think, especially for associations, it really kind of goes back to what's required for the loans, right? So it's the maximum coverage. Actually, get it a lot from lenders, from loan officers. Did the association increase their coverage from what it was last year to this year? Because I know sometimes there's an option, right, to keep it the same versus to increase it.
Yes.
So that's one thing we just got to make sure that that's always done. Always increase coverage just to make sure that fulfills the loans. As far as other issues or questions about flood insurance, I'm not sure if there's any other ones that come to mind. Sean, can you think of any?
I think you covered it.
Okay.
Yeah.
Can I just touch on something you mentioned really quick?
Yeah.
Okay, so for the RCV portion of say a condominium, we often get asked, okay, we have $250,000 on every unit in our building. Why do you folks still ask us for an increase in replacement cost value every 3 years?
That's actually the other question that I had in mind.
That the insurance asked?
I was trying to see if Sean remembered.
No.
And the answer to that is, so do we get charged for that? If we're increasing the RCV, even though we're maxed out and FEMA is not going to pay any higher than the max, are we getting charged to increase the replacement cost value? And the answer is yes. There is a rate charge for doing it. Yeah. And so while some people might not want to increase the RCV because they aren't going to get that additional coverage when it comes time for a loss, that is, the RCV charge is minimal, but it's really to it serves as a way to keep the building updated, to keep the insureds interested in the interest, if you will, of their building and the value of their building. And it contributes to the overall affordability of the program. So you can kind of look at it as like an investment in the program itself that you belong to. And that's probably the best way to explain it. We get that question quite often, especially because the RCV requests happen every 3 years. And the majority of the buildings that First Insurance covers are at that 250 times whatever unit number is there. They're already at max coverage. So yeah. Trying to think if I have any other questions. Is there anything that First Insurance can do better, or is there some other process that you wish we had to make your flood policy writing lives easier?
Not really. I mean, we rely on you. No.
Well, I hope I helped to keep the murky waters clear. Okay.
Such a great resource.
Okay.
Anytime we have a question, shoot you an email, shoot us right back pretty quickly. If we give you a call, you answer. So, I mean, pretty happy as far as servicing. and from an insurance agent standpoint.
Okay,
Yeah.
that's happy
We're
to
super
hear.
happy.
Yeah.
You're so professional and quick to respond. So
Thank you. I do love
glad
email.
we have you.
Thank you so much. And I'm
Yes.
glad to have you guys too and for being here. I love having emailed questions, as you guys know.
Mhm.
Yeah.
Let's end it on a personal note.
Okay.
Something
is
you
it?
like to do for fun?
Something I like to do for fun? Oh gosh, there's a lot of things. I like to create art. So I like to paint and create sculptures with paper.
Oh.
Yeah.
Paper mache?
Paper mache or washi paper. I will create like paintings where the image is hand cut out paper to form the image, and then I will apply paint to it. So I love to do that, and I love to write. Yeah.
Awesome.
Do you have any of that on your Instagram?
I don't have Instagram.
Oh,
I have
okay.
TikTok. I'm
There
an
you
avid
go.
TikToker. I love to make videos on TikTok.
Yeah.
So yeah, I do the majority of my online content, or actually all of it on TikTok. Yeah.
That's awesome.
And some of it's humorous. Some of it sometimes is corporate humor because,
Okay.
you know, we have to have an outlet to exercise some of the stress from corporate America.
Well,
And yeah.
Speaking of which, do you have any social media handle that you want to share, either for your First Insurance, for yourself?
Not for myself.
Oh, okay.
That's for my mental health.
Just search your name.
Sure, you can do that. First Insurance, we do have presence on Instagram, LinkedIn, and Facebook. And we do a lot of employee activities and videos. And we like to share a lot about ourselves personally. And we have a great marketing department that helps us to act and create really exciting videos. They're exciting for us.
Yeah.
And that we can post out on our social media to just let our agencies know a little bit of who we are behind the scenes. So that would be First Insurance Company of Hawaiʻi, and that would be for Instagram, Facebook, and LinkedIn. Yeah, check us out.
I like checking those things out because it makes it personal, right?
It does.
It's not just work.
No.
There's much more than that. You guys have fun at work too.
We do.
Just like us.
Yeah. I think we're similar. When I come here to visit, I definitely feel the similarity. It's very much like a family structure, and everybody knows each other. Coming in here today, it was really comforting to hear the nicknames of some of the employees here, and we're quite the same at FICO.
Yeah.
So, yeah.
Awesome.
Yeah.
Well, Maile, thank you so much for being a part of our podcast. We really appreciate it.
Thank you.
And we're going to go sign off. Again, this is Atlas Insurance's Risky Business. My name is Sean Satterfield.
I'm Maile from First Insurance.
Choi.
Take care and aloha.
Hello.
Thank you, everybody.